Hello and good evening, everybody. You are back live with the crew, and thank you so much for being patient with us. We have had a time with our StreamYard, but we'll get into that in a little bit. First of all, we have to say hello to our favorite guest, Simon, brother. How are you this evening?
I'm doing very well, Allan. Glad that you are here, my friend. It was, in fact, some troubling times there with the StreamYard, my friend. Oh my gosh, talk about a brick wall meets head meets brick wall.
Yeah. I just have to give a brief little story. I had help from Simon here, my wife Elizabeth. There were so many different people who reached out, Becky, Joanna. It was people, just everybody were just working me over like, Allan, have you tried this? Have you plugged it in? Have you done this over here? And it's after a while, you're just like, we've tried all that, but it was really on their side. And it said that on what the thing they gave us was, hey, it's not you, it's me. the classic, breakup deal. And I'm sitting there going, how am I supposed to? And then, some bot keeps telling you the same 5 things to try over again.
Please try this. Please try.
So,
of course, it's on the weekend, right? Nobody's at the office.
Yeah.
Right?
Of course.
That's when stuff breaks. Our call center is gone home for the weekend. Please try between the hours of 8 a.m. to 5 p.m. with a 2-hour break from 7 a.m. to 9 a.m. Eastern Standard Time. Yeah. Monday, Tuesday, and Wednesday. Thursdays are different hours. Please look up, go to our website and check that out. Good luck with that.
Oh, by the way, it's a leap year.
Yeah. Oh, yeah. Sorry. Wrong schedule.
Yeah. It's fun. Yeah. So anyway, we've all been through it. It's like, if you know how it is, it's like, oh my God, we have a book that thick of just passwords. It's just like, what do you mean it's not me? I'm just telling you it's me. So frustrating.
I know. I can only imagine, in the future, we might all kind of have to at some point maybe do the retina scan, right? And so you're doing it. And it's not picking up, but you're like, dude, it's my eye. Right. It's my freaking eye. How do you fake that?
It is me. Yeah.
It is me. Yeah, man. Again, though, I'm so glad that everything got worked out, and we're here tonight to discuss a great many things within IBC.
We got a lot going on,
and other avenues as well.
And look, we got Doreen in the house. We got crawfish.
Doreen, crawfish. What's good, Doreen? Becky's in the house.
Solar. Sammy's in the house. Sam, are you going to be okay, brother? Aren't you right in almost? Well, he's maybe just a bit north of where that's headed. That hurricane's headed right for Sammy Solar, I think. Not good, kids.
No, it's not.
Yeah, I'm not giving weather forecasts or news, but man, this one looks bad, guys. This does not look good. No. Hang on tight.
The last one that rolled through, the devastation is crazy. We see it, on the TV or social media.
Yeah.
But the level of firsthand accounts that's coming out from these events you really get a different view of what's really going on, how it's affecting the people, emotionally, financially. I mean, lives are just done. Way of life where you lived, it's a horrible thing. So for all of you that are still making it in those areas, God be with you. God still is with you. Universe still with you. It sucks today. It's going to suck tomorrow, but there's people in this country and in this world that are sending their love to you in some way, shape, or form. So, not that
well said, brother. There is so many people that care, and
lots.
There may be a possibility that my show tomorrow actually has somebody who has boots on the ground with the whole thing, and it'll be really interesting to hear their point of view. I know it's sort of last week's news, but it's not, guys. This is going to go on for months with these people's lives. Their entire town has been underwater and gone, and half the people that knew how to do things in town are not there anymore, and they've either moved away or passed away, and they're not coming back anytime soon, and they have to completely rebuild everything, the grid, the roads, all of it. And needless to say, they're getting less than stellar help from our government, because the government seems to be concerned a little bit more about other nations than their own people. Again, my point of view, it just seems that way. Job one doesn't seem to be the human being on the street. And I thought it was really interesting. I was listening to something that Biden said, I believe it was today or yesterday. And he said, well, we serve the people. And I almost spit my coffee out all over my laptop. I'm like, really? You serve the people? Okay. I'm hearing it. I hear it.
Question. I just need a little bit more specifics on which people. Like, is it a blanket people? All people? Who are we talking about here? I'm confused.
Yeah.
A
little clarity on serve.
Yeah. A little clear. If you just say the word clarity, there's going to be a committee that has to watch a committee that takes over the committee that assigns another committee to watch that committee to hone in on what serve people and the people there within. Whoop! There's 4 years of just, we don't know. We have an answer. An answer, no action, just an answer. Yeah. But all the more reason to, be where we're at. I'm so grateful I'm at where I'm at with this digital asset space. I'm so grateful that I'm at where I'm at with this wealth preservation / wealth building stage of my life, and these things, strategies, instruments, assets that we get to just formulate and bring together, and we're able to survive and thrive with the winning combination right now. There's a lot of light at the end of the tunnel that I see. And then, Allan, in my short time that I've been here, it's really given me a lot of not hope. That's not it. That's inspiration. I'm seeing value again, obtainable value that I can take control of my own with my own hands. That's why I think people like precious metals. We have that control right there, right? That's what I liked about it. And then cryptos came around, and I was all in with that, of course. And now here's another vehicle instrument that we're able to utilize to use to our own ends, and we have the most control of anything else like it. Well, we're the ones in the driver's seat, and I absolutely love that. So is a great things and great times to be where we're at and have the things we have.
Yeah, it is. And it's such a, you make a great point. We in crypto understand the value of taking monetary systems and using them for our best interest. In other words, our interest, our personal use case going forward has to be taken care of on a family basis now, because we don't feel protected, or we don't feel represented, or we don't feel as if people who are in higher places, whose job it is to serve us, are doing their job. And even the ones that care to or would like to seem to be totally outnumbered by people who are just either incompetent or completely corrupted into doing what's best for themselves. This is how crypto became so big. And we are in a family of people now who get that. And we're part of a group and a team and a family and an army and the XRP army and all of it. And we all stand together as one. And we're able to change worlds financially through digits around them. Every time, one of my favorite stories, and I was so into it, I watched it 2-3 hours a day when it was happening, was the Canadian truckers. And it was just such a blatant, obvious play of like government not really telling their citizens the real story of what the protesters were really doing on the street and how civilized they were and how good they were. And then they did everything to stop the protests that they possibly could. That really told me that crypto had a place in the world. And that was, anyways, it was amazing. And I always look back on that one so good. They meant a lot to a lot of people. I know that you and I kind of jokingly had a little story about that yesterday, but about truckers, what we could do with it, the debris that they're supposed to haul away.
Man,
we got GA, we got GA, Teresa. God, we got everybody. Frankie Sanchez in the house. Look at this. Teresa, sorry, girl. I got caught up working on my solar panels today. I had an issue. No, Sammy, don't call me. You have better things and bigger problems to deal with. We got it sorted out. Thank you for caring. What do you got, Simon? I was supposed to call Simon. I didn't.
Oh, well. Shame on you.
Well,
do better. You do better.
I know.
Hey, you can only do what you can. One does what one can. GT Fox want to know why can't they send a super chat?
Why can't they send? We don't do super chats.
There you go. We like thumbs up though.
We like thumbs up. Okay. Here's my theory on super chats. I like them. It's really cool. It's a great thing. It is really helpful. Join the Patreon. It's cheaper. The other problem that I really have, is they take 30% for doing nothing. I don't want you and I to encourage them, the companies that we remain nameless who run these things, take a massive margin for doing absolutely nothing.
That's a hell of a payment processing fee, man.
It's huge. It's crazy. 30%. That's just nuts. I'd rather see you spend, if only 70 cents of a dollar goes to what you want it to go to, that's just criminal, in my opinion.
Yes, sir.
So, yeah. Anyway, that's how I feel about those guys. I mean, Patreon is 7%, 8% they take, something like that. So that's kind of understandable, still expensive, but it's at least it's going to the right people. But I appreciate the thought, brother. I do. Thank you. Thumbs up and like the video.
Yep.
As I know he already has.
Yeah. Done and done.
Simon.
Yeah.
What do you want to talk about tonight? I've got 3 or 4 things here, but what do you want to talk about?
I got some no show but tell stories. Show and tell.
I'd love to hear that one. This is a story I haven't heard yet. So I like those.
No, it's not. Actually, this is good. So there's let's see. I know I can say their handle. So Zip, that's usually in the chat. I was on a call with Zip's son, and one of Zip's sons, and JV, and they had some really good questions in regards to just the breakdown of an illustration, what everything means, but then they're really diving down deep into strategies, thinking long range. I really tip my hat off to Zip, what he's done with his boys, just teaching them about money, and his youngest son, who was on the call, doing, asking his questions for, his purpose for IBC policies, etc. And we were breaking down the many things, but one that I thought would be is very much worth repeating because we haven't repeated it enough yet. And it is kind of diving into the weeds here a little bit. So we will be repeating this over and over and over, or this topic. So as we think long range, right? We're not just thinking about our lives. Typically, we're not only just thinking about our kids' lives. We're definitely thinking about our grandkids' lives, and actually beyond that. Okay. So that's kind of the mindset we're trying to get in. And this young gentleman, by the way, is in his 20s. So this is, this is really, really good for him because he's trying to think that far, right? With dad right there, bringing up, hey, you don't, things of like, well, you don't know if you're going to be there or not. So do you think you might be able to use this like this? Will you be able to use your policy in this way, use your policy in that way, and etc. So one of the questions that he had was in regards to dividends and how we can use dividends. Okay. So when we get dividends from the company, we have a few options. A few options how we can receive that dividends. Okay, one of them is a taxable event. Most of these other ones are not. Okay, the first one that we're in practice with the infinite banking concept is we elect to have that dividends go directly over to PUA. Now, his first question on that was, if I elect, let's say I got a $2,000 dividend and it went over to PUA, does that take away from my my PUA that I can contribute, right? So let's say we have a policy that's 5,000 base, $10,000 PUA, and now we have a dividend of $2,000 that's coming over into PUA. Does that mean $2,000? If that $2,000 goes to PUA, does that mean I only have $8,000 now that I can contribute to PUA? And the answer is no. That allocation of dividends is calculated in. Okay, they're baking that in the cake as you go along, because after the PUA, our time frame of when we're able to commit to PUA in our policies, once that goes away, our dividends is still buying PUA. So that's one way we can use the dividends initially. Nelson talks. Yeah, I do too. I think it's great. Now Nelson talks about.
And the young man thought about that. The young man came up with it.
He's read the book. He's read the book, and he just wanted clarity of like, hey, if that $2,000 is going over there, and I've now taken away a little bit of my cash hole that I have, right? We talk about, we need buckets to fill, we need holes to fill with our money. So he was concerned that, well, if I do my dividends over to the PUA, now I only have $8,000 I can stick in the policy on the PUA side of that policy, or that contract every year. And it's going to less and less because the dividends is going to increase every year, right? A little bit, but there's still an increase, which he's thinking in his mind, dang, is there a decrease? So I really, bam, dude, gold star for that question. Fire. So then we talked about another way that we're able to use the dividends, and we were talking about the cost basis. Okay, so you might get to a point in your life. Nelson talks about when you hit what we traditionally call the retirement years. He calls the passive income years, which I am now trying to remove that retirement state of mind from from who I am, my vocabulary, my way of thinking. I'm trying to insert my passive income. It's time for dad to finally have all these wheels of wealth support me in all of my endeavors in my later years, right? The golden years are back, so to speak. So we were explaining how that works and how it's not a taxable event up to a certain point, and that was to your cost basis. Well, what came out of that is it's your total cost basis, meaning whatever you have put in up until that point where you elect to now take dividends as cash. Okay, because we're saying, hey, I'd like to take my dividends now. Okay, right now, most of us say, well, that's a taxable event. It's like, well, if I did it on the first day, absolutely. But if I wait many moons, right, 2-3 decades, then no, because I've built up my cash basis, and so that's all the money that I've put into the policy, out of my pocket into the policy. Well, that's base plus PUA.
Yeah.
And so we went down this illustration about 30 years. His cumulative premiums was over like it was like over 600,000, right? In one of the illustrations that we were working with, right? Okay. There was multiple illustrations, but I do remember that we were using that illustration to drive the point home. It's like, yes, now you could take a dividends every year up to that dollar amount of $600,000. It's like, whoa. For him, that was like, wow, that's pretty powerful, right? It's like, yes, it is.
And because we all need to remember this: the money isn't taxable. Okay, income is taxable. That's something that most of us can't get in our heads. Like, well, if it's your money, it's not taxable. But if it's your money making an income, then it's taxable, right? The income that it made. So if your base gets huge over time and you pull that base out, it's your money. And a lot of people mess that one up. But that's a great illustration of exactly what to do with that. I just saw where Zippy showed up in the house. Zip's in the house.
No, what's good? Yeah. Zip and Dom, they're watching. Yeah, dude, that was guys. I'm just sharing a little bit about the call, because we were talking about the cost basis and dividends, and one of the different ways where you could use the dividends in a non-taxable events.
Yeah,
go ahead, Allan. You had something else to add.
I do. There's something that's really been on my mind lately, and I'm working on it, and I'm trying to come up with a concept. I'm trying to find a way for us, because I always see these questions every night. Well, what about term, and what about IUL, and what about no, and no. Okay. What Simon and I are talking about is a specific style of being your own banker. But being your own banker and the strategies in which you talked about is complex to a lot of people. What I'm trying to find is a new catchy thing to call it, and then explain it to them what they're buying or getting.
Right.
You know what I mean? It's like we need something that says, oh, no, this is how everybody's going to bank going forward today. This is how everybody who wants to buy anything in the future should buy it like this. And instead, we use that insurance title, and then it gets caught up in the muck, and then there's arguments, and everybody decides this mine's better than theirs. And then
there's been like my family banking, private banking, what's another one that I've heard?
How about this? Buy your stuff and get your money back. How about that?
Well, I think buy your stuff and get your money back. You really have to know how that really is, because if you just say that, they're like, well, how do I get my money back? Where is it? They're thinking it went this way and it's going to come back to them like a boomerang. Sorry, pal. The boomerang path is a lot bigger.
Yeah, there's 2 stops.
Yeah. There's definitely 2 stops, but the route of travel, it's far bigger.
Simon, we have a fantastic question here that I know you're working on, and it just shows to go. All of you, there's no limit to the amount of research and future things that Simon and I will not attempt to create for you all to make a better world and helping people out as best we can. And I know that this is big on Simon's list. So I'm going to hit you with this one, Simon.
Oh, okay.
So tell the Australia story.
All right. So, okay. The Australia story is this, and kids, we'll get back to actually real quick. I saw a comment. I'll leave this one up. I just want to address it. John Foster, his question. Can you use dividends to pay your base? Yes, you can, but I'm going to leave it at that for just a moment. Okay. I'll come back to that question. But simple
we're going to
answer.
Explain why that's probably not your best advantage to do, but yeah.
Depends on where you're at. Actually, I'm 50 on it, to be quite honest. Because I see value in it. It gets deep. Anyways, Australia doesn't do whole life insurance. What's the best way to tackle this? For right now, I'm in contact with others in Australia. There is an Australian group that I has heard that has formed, people that are coming together to find the best routes. Now, I had a call with someone from Australia and another individual that was from Paris. I'm sorry, Paris. Knucklehead. France. I always get them switched up. And both jurisdictions don't have this, their insurance companies currently don't offer these types of products. So in my opinion, the best thing that you're trying to look for, one of the functions, okay, I would say is you don't want term, because term is just renting insurance, but you want a product, okay, that offers cash value. I don't know what it's called there in Australia, but the cash value is the thing that we're able to collateralize. If we didn't have the cash value available to us to utilize, our banking system goes bye-bye. It's pretty much gone, right? It doesn't work. Like the dividends that we talk about, there are some other products allegedly offered in Australia right now that have a dividend paying, but it's not dividends. They call it something. It's called something else. But I have someone that is using their broker that gave them the Infinite Banking Concept book, and they are looking for companies and the products and to find what best products will be able to use for this strategy. You know, the strategy it's versatile. But one of the key components is the cash value. We need to be able to collateralize the cash value, borrow against your policy. That is a core thing that we are looking for within these policies. Yeah. Okay. Yeah. So, and they word it different, by the way. The whole life, it's not whole life. It can be considered a permanent life is another term. Because it's for your permanent life. You got it, right? Not term, permanent. I did have a list of companies that offer similar products to dividend paying whole life insurance. So if you would please hit me up. My email is like right here on my name tag tonight. Yeah. So you can email me and I can email you that list. And I can, once I have your email, then I'll be able to coordinate with you and others within Australia and other jurisdictions as well, because I know that there are other jurisdictions that are trying to get a group together in those jurisdictions, different countries, to find a product and a path to utilize this strategy. So I hope that helps, Brendan. And I really do.
Like the prelim to his answer to that question was, and I really mean this, Simon and I discussed that subject a lot. We discussed even going to Australia and meeting with a couple, 2-3 companies to actually make that happen for people. Yes. It's such a powerful tool that it should be available there in that nation. Now, the UK has actually ruled against it being there in a roundabout way. I'm sure the elites in the UK are found
Yeah,
a way to do it.
there's
Yeah,
some grandfathered in stuff that's going on right now, and it's
yeah,
basically the insurance industry in that jurisdiction decided to
mhm,
not offer those things anymore. Um,
yeah,
I would also like to mention that I'm building a template um, for what are core things that we're looking for, and I'm really trying to associate products we have here in the U.S. that could be used and their characteristics. And honestly, that's taken me a little bit of time to put together because I want to ensure I'm giving you guys all the information I can, because it might just be a few sentences that I put on this template that's going to go, oh, we have something like that. Oh, that function
yeah,
right there,
yeah.
and it's gonna click, resonate, and now you got something, right? So I'm
I've
building that.
also got tentatively this coming Thursday night. I have some stuff that possibly might be on this. I may or may not have a leading broker from Caleb or Brown on Thursday night, and he would be a good person to ask that some of those questions about some of that stuff, because he's actually from the banking, Australia banking, before he got into Caleb and Brown as a broker. So look forward to that.
You know,
I
there's
don't think I'm going to get him on Thursday because I think he's busy, but I have fingers crossed. If not, we're going to talk about a couple of other things that are really going to be interesting, including ISO, this one right here. Okay.
that's
This
trust
is,
question.
yeah.
That's trust. That has
Remember,
trust written all over it.
it does. This is very interesting. I want you to stay tuned Thursday night because I'm going to cover this in great detail. Okay. This is an exit strategy. This isn't tonight's show, but we're going to discuss exit strategy on Thursday night, and I'm going to cover this. And by the way, this is a great answer to a problem. I have a better answer than that one coming up. Okay. All right. ISO, show up Thursday, dude. You're going to love it.
ISO has been on it too. They've had a lot of good other comments if you scroll
Oh,
up.
no, he's on it.
Yeah.
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 He's obviously been doing his homework.
Right. Absolutely. Frankie's got a good question there too.
I'm a 63-year-old. That one.
Yep. Okay, so Frankie Sanchez, I'm a young 63-year-old and not looking to retire anytime soon. What IBC strategy can I implement to preserve my crypto gains as bull run? Okay, so here's what you could do. And I'm gonna fire from the hip here. Get a policy, but that policy is gonna be based on your income, mostly on your income. So whatever's coming through your front door of cash, that's what the insurance company is going to use to say, here's how much you're worth. Here's how much we're going to allow you to contribute to your premiums base plus PUA. And what you can do with the policy, okay, is you can ensure that it has a PDF account, premium deposits funds account. This is one way. It's not the way, but it's one way. And what that does is it on a standard PDF account that is attached to your policy, it allows you to stick up to 2 years worth of total premiums. An example, let's say you had a total premium policy or total premiums for a policy that was $25,000. Okay. So that means for this PDF account, you could stick in 50,000. Now, in this bull run, is that a lot of money? Maybe, maybe not. Depends on what you consider a lot of, a decent amount of money. But let's go a step further. I said get a policy because that's what I did, right? I'd be looking at getting in a policy because we know we're about to take off sometime soon. We know it's going to happen, right? But at a minimum, I would at least open up the conversation and get to know an IBC practitioner for this. and here we go. You could theoretically, to lock in your profits at that moment, if it were me, I would instantly go get a policy. And you could also do this with your policy. You could see if you're able to backdate your policy by a year. Okay, so let's paint that picture real quick. So if you waited to get a policy till you had your crypto profits, because that's what you're going to use, and you were going to get a 25, and you qualified to get a $25,000 a year total premiums policy. If you could backdate it by 1 year, that means you could stick in $50,000. So this year, 25,000. Last year, 25,000. Oh, well, we have the PDF account, the standard PDF account over here. That's another 50,000. So we just locked in $100,000 into a policy. Now I know I'm talking what some people might consider, well, Simon, that's only 100,000. I'm looking at bigger, but wait, there's more. Yeah. And I'm speaking specifically to IBC. I know Thursday nights has some other beautiful strategies as well that marry up very well with IBC. You could also ask about a PDF Max account. A PDF Max account. What that is, it's the same thing as the PDF account. You could put in premiums over there, but what you get over there with the PDF Max is maximum years. So that's anywhere from 5 to 10 years worth of total premiums. So if you were able to get 10 years of premiums into the PDF account, well, that's 10 years times $25,000. That's $250,000 right there. Okay. And then plus the other, this current year, 25,000, and last year playing catch up, another 25,000 full. So $300,000 that you could do in that little scenario right there. Again, Frank, I would definitely reach out to, I'd reach out to Jarrett Vick. He loves talking about this stuff all day long. I'd reach out to Jarrett. If you want more information there, you can reach out to me as well, because it's a discussion for you to continue to have. I mean, I know Allan right there. He's looking beautiful at 63. Not to put his information on Front Street, but Allan's packing a couple, right? He's instruments, right? You got a couple instruments there?
I do.
Yeah. Okay. I got one. I look forward to getting two. But Frank, that's how you can implement.
Question. I want to add to that too. That I was kind of surprised you didn't go down this road a little bit. There's no reason why you can't hang on to your crypto and stake them if you have Cardano or something that stakes real easily, or an AMM, or any of those things that are coming forward, or borrow against without interest. A lot of these products that are coming to crypto aren't here yet. But as I talk about in my shows all the time, there's a reason why, BlackRock's involved, right? Cantor Fitzgerald, right? Bank of New York Mellon. What's the one I'm forgetting here? Citadel. All four of those companies are the largest financial institutions in America. And they've just come out and said they're either going to collateralize, borrow against, loan, or trade with crypto, just in the last couple of months. So all of these products are going to come to you as a retiree, as somebody who owns crypto. The fact that you own crypto right now, you should really be glad that you're in the place you're in, because I don't know how much crypto you have, but I know this. How many people do you know that don't have any crypto? Zero, zilch, not a single XRP. How hard would it be for them in today's financial world to catch up to the amount of coins that you have? It would be unbelievably difficult for them they'd have to sell a car or a house or do something to catch up to what you've DCA'd into. Remember, you're accumulating XRP at the price of 60 cents. Well, when the thing's $60 or $600, how much is it going to be generating monthly as you, the retiree? A lot of money. Okay. So you're going to lock those coins up, and you're going to be able to lock those up in an IBC or in a trust, either one.
Both. You can do both, man.
And it's just going to be incredible.
Yeah. You know, and I get the, you know, some people like, well, I always like poking the bear a little bit. Well, Simon, why do I need IBC if I have a trust? I'm not saying you do need, but why not have 2 cars?
Yeah, exactly. Yeah.
Need is different, but you don't know that IBC, you might figure out that it plays very well into your strategy with your trust.
Yeah.
You know,
I want to address this right here, because this is a great point. It's a very good point, and he's spot on with this statement. The only thing I'd like to say about this is IBC and the way we're using it and the companies in which we're using them with is a trust. It is a trust. And it is tax deferred, and you can use it for generations. So they're very similar in so many ways. The difference is that a life insurance, whole life insurance, is hundreds of years old. It has the foundation of generations already, and they're not going to let it go away. Yeah. So I just want you guys to remember, whenever we talk about IBC is a tool and a strategy. And I think it's the best strategy for using money that I have ever seen. It's less complicated to use your own cash than any other way I can think of.
Right.
You get to write the terms of your own loan. When you have a couple $100,000 sitting in this thing from your crypto profits, or even in crypto coins still, and you can borrow against it, or you can sell these, or you can purchase, and then with the income of the product in which you bought, whether that be a rental land property, a business, or income revenue, a stream of any kind, AI bot that's working for you 24/7, well, any of these things that are coming in our future, and that just slowly pays back the loan that you made on your own terms. Plus your compounding interest on the true full amount that you started with, not the minus of what you're using.
Right.
I just really I want everybody to understand what we're talking about with exit strategies here, guys, is we're looking at truly 3 things. You're looking at LLCs, you're looking at IBCs, and you're looking at trusts. And everybody in this chat right here, in my opinion, should have all 3 one day. All 3 one day. And if you're not, you're missing 1/3 of the equation. And that equation is financial freedom. And that's what we're all after. And that's how we're going about it. So, enough ranting. What else do you see up here you like?
Well,
there's some great chat.
You're curious. I'm going to go back real quick to your Simon. How come? I'm really surprised you didn't talk about this. That's because I was just answering that one question.
I know.
Yeah. I don't want to lose. Sometimes, you know what I'll do? I'll talk all night, and I don't even know where I go.
I just heard from a little birdie. Be very, very careful with anything you have in Coinbase. Be very careful. I'm just going to say it like that. This birdie's wrong a lot, but it's not looking real good.
Well, I guess I'm going to move to Florida. I'm out.
I know. Yeah.
Well, that's it. I got nothing.
I'm thinking. I
got one place, and I don't want to jinx it.
No, I know. Me too.
Yeah.
Well, my wife's learning Spanish, so El Salvador's in the picture.
Great. I make a killer taco.
They don't make tacos down there.
That's right. Open market, baby. Here I come. Let me go back to the dividends. Because there was a question, can you use dividends to pay for base? That was the other thing that we talked about, that was talked about in the call tonight, was Zip and Son. Zip and Zip Son. And this came from Zip Son. Hey, can we use that? And I said, yes, you could. You can use your dividends to pay for the base, and it's non-taxable, because when you take the dividends and you either buy PUA, buy an insurance, or you pay base, again, paying for insurance, there's no tax. Now, here's what I explained to him. Not explain, just the information I'm going to give to you guys right now is this. You get a dividends, but you say, no, I want you to pay my base. Okay. So when that happens, Allan, what didn't you have to do?
When you pay tax, declare it.
What you didn't have to pay your base.
Oh yeah,
for all these years, right?
Yeah.
You're paying out of pocket, man. You're investing. You're not investing. You're capitalizing into the policy, right? And then one day you say, "Ooh, no more." You pick up the shovel, start digging. You pay the base. Dividends pays the base.
Yeah.
Well, that's not taxable, but you didn't have to pay. So you got the money right there in your hand. So you realize the gain. You just went as a little bit of backwards. Somebody else paid the tab. You didn't have to do it. And that's your gain right there. That's cash now. You freed up liquidity to go and be utilized somewhere else. Now, here's the big question. The big question is, well, Simon, my dividends is far bigger than my base. Well, where does the rest of it go? And so we're doing a deep dive on that to ensure this answer, and that is it goes base, whatever left over, to PUA, back to PUA, because at some point your dividends is gonna take care of that.
Yeah, so it is 50. Now I say 50,
it all, but
yeah.
it's all that's baked in the cake. So now you have a policy that is efficient, that you don't have to do any more out of pocket to that policy. Guess what time it is? It's time to get another policy. So those are things to think about. And this young man, dude, got it.
Yeah.
And I tip my hat to Zip for the education that he's brought to his kids, and the education he's still bringing to his kids, man. It was great to see that young man just thinking and going with it. Go ahead, Allan.
I want to. That's such a great. I love that Zip's teaching his sons this, and it's something that if I could turn the clock back to me being 25 years old, of all the things that I learned in life, this is the thing I would change. I just want everybody to hear this. If I was 25 years old again, I wouldn't buy a trust. I wouldn't buy crypto. I get a whole life insurance policy. I just want everybody I want that to sink in a little bit. Okay. Because it's so useful for every month of the rest of your life, and it's compounding. And by the time I had to reach this age, I'd have been done and retired already. And it would have been massively profitable to do. Do I think it's going to go away and have a short-term life in the next 5-10 years? Absolutely not. Now, we get this one question every single night, and I'm going to answer it. It was earlier. I don't remember who asked it. Why don't you like IULs, or what's the problem with IULs? I was driving down the road the other day, and it came to me to how to explain this. Okay. There's things called BOLI, right? We've talked about it before, and we could probably talk about them every show. And it's bank-owned life insurance. Okay? BOLI. It's an acronym. That when they buy life insurance, the banks aren't buying term. They're not buying IULs. They're buying whole life, and they're buying whole life, mutual whole life, not mutual, the company, mutual ownership of the whole life itself. So the reason why we believe in whole life insurance is because the largest banking institutions in the world make massive amounts of money from life insurance, and that's the ones they buy. So act like Rockefeller. Don't act like Joe Sixpack and buy a term. That came to me when I was driving down the road. I was like, well, that makes a lot. Why would you buy a term? And yet there's financial planners every single day that wrap their mind around term, and they sell it to people, and it makes sense to a lot of people, and it doesn't make any sense to me at all. So I just wanted to put that out there. What do we got here? Oh, we got my brother's in the house. Code Man. Love you, Cody.
Oh, yeah.
Cody, Money Paradise is in the house, guys.
We had a great conversation last night talking about the financial strategies and whatnot, and what to do, what can't do, and all these things. Plan, and
that's it.
Trade your plan. Yeah, it was a good conversation. Nice.
This is a good one.
Go ahead.
Here's our girl right here.
Can you share an example of how long it would take before a policy's dividend makes the policy self-sustaining? Okay. Yeah. Just give me a moment, actually. I'll give you a real world example.
Real world.
So just give me a minute here, and I will. Oh, wrong screen. This might take a few mementos.
I know it's not as long as you think. The other thing is there's a bunch of contributing factors, obviously.
There is, but we're going to give a ballpark hypothetical because that's all illustration is. Numbers on a picture to get you to conceptualize the real thing that's going on in the background. Jared.
Good night, Sam. Love you, brother.
Yeah. Let's see.
Yeah, Julie always asks the best questions.
No, that's a great question.
I know Elizabeth and I.
Oh, you know what?
I want to say she and I's was 7 years. I want to say.
Mm-hmm.
It was somewhere in there. 5 to 7. I think it was like 7 years, and it like broke even, and then every year after that was just complete frosting. If I remember correctly.
That sounds about right. I'm actually just going to go through
the old 7-year itch.
There we go. Giggity. Okay, for mine, 8 year.
Yours was 8 years?
8 years to take care of my I'm greedy on my policy. 8 years for me is when it really just pretty much takes care of it. Year 8 and 9, and then after that it's smooth sailing after that, and that's for my.
So just imagine. Let's go back to the 25-year-old. By the time he's 33,
done.
There it goes.
I mean, let's say 10 years on the long, maybe 5 years on the short. So in that range, okay. I'm kind of speculating here between Allan's minds and a few other illustrations I've seen. Yeah, that's inefficient if you're going to use it like that. Dividend paying for the base, there you go. And once you freed up that capital, it's time to go get another policy in the infinite banking concept strategy, right?
That's right, and you should be. And in my opinion, we bit off probably more than we could chew in getting the 2 policies in which we got. But now that we did, I'm glad we did, because it's sort of like a forced savings plan, and it's compounding. And I love savings accounts that are compounding. So, and there's so many, if it looks like you're going to be getting close and you don't feel like you can pay the dividend the following year, Simon and I have a million strategies. Well, at least 3 or 4 strategies on how you can pay it and pull it off with very little pain. Yeah.
Oh yeah. And Black and Cat, it's great if you're 25. That's true. That's if that individual elects to do that. I mean, personally, for me, if I was 25, I wouldn't change anything that I'm doing right now. Dividend, you go to PUA. You go to PUA all day. I want that just going over there until I absolutely want to take advantage of it for my strategy, right? For my strategy, right? That's just what I'm electing to doing right now. My life could change where I'm going to switch that up, but it's good to know those options are on the table. Because when I speak to my family about their policies and things that they can do, you know, for them to know that, hey, this car has a heated seat and the windows roll down automatically, you know, they're going to want to know that stuff, you know, so they too can become familiar with how this will work, you know. So, yeah, you're right. But yeah, great if you're 25, but it's still on the table.
But it's totally on the table because, all right, I'm 64, right? So
yeah, you.
By the time I'm 71, it starts paying for itself.
Yeah.
Okay. Right.
Yep.
Like I don't plan on passing away at 71, but let's say it did happen that way. This is something that now Elizabeth has the rest of her life, right? That's paying for itself. You know, this is like, I suppose if you're in your 80s, it doesn't make sense. I get that. But even then, the beneficiary can be somebody like your grandkid. This is like, I'm telling you guys, this is a whole different way of looking at money and lifestyle. It really is.
Oh, for sure. Viking Cat 55, dude, not to put Mr. Jarrett's information out there, but he's close to that, probably. Maybe a little one side than the other. But yeah, you know, you could have 10 years, 65, it could pay for itself. Now, let me tell you, when I think about myself in 19 years in less than a month, when I think about 65, I'm thinking, hey, more than likely, some type of health issue is really going to come back around again, probably right somewhere. I don't know what, but it's just statistics. So in my mind, I'm mentally prepping for that, right? So you're 55. You know, you're 10 years further down the road than myself, but you got 10 years to if you wanted to do the policy, get it rocking and rolling. Year 10, you're done. Let that dividends pay for your policy, and you can still continue to do your loans like you were. And now you don't have any out of pocket except for loans. Now you could actually take your base and start paying down your loans. And now whatever money you freed up money that you didn't have to pay those loans. An example would be before you elected your dividends to pay for base. Let's say you had loans and you were paying back that loans out of pocket, and you were paying base out of pocket, right? So there's two hands with money that are forking out money, right?
Coming and going. Yeah.
Right. Coming and going. Now, one day you say, hey, dividends, it's time for your job to start paying the base. Well, that's great. That means this money over here, you freed up. Now, both hands can pay back the loans if you want, or maybe not. One hand just feeds the loans. This other does, you know, something else more productive in a different manner. Sorry for the gesture of hands.
It is. Yeah. I love it. Yeah. It's perfect. Here is yet another great parent.
Yeah, man. GA, love GA.
Yeah, GA, brother. This probably is the best advice you can give anybody. I'm not kidding you guys. It's better than a 401k. The guy, I don't know if you guys know this, but the guy who created 401ks, actually, he started the IRAs, I believe. No, he started 401ks. Yeah. He just did an interview. I was listening to him. Yeah. And he said, oh, they've bastardized the whole thing. It's a Ponzi scheme. It's a scheme now. The government uses that as a scheme to inflate the stock market. It's all it is. Remember, stock market's only been around, what, 100 years, less than 100 years. These insurance policies have been around for hundreds of years. Okay. Let's remember that. Okay. It's bigger than that. And it's brilliant. Yes. Anyway, I can't say enough about it.
No. And
This
GA,
is
that's solid advice.
This is probably the smartest comment I've ever had on a live. This is our 15th show or something like that. This is probably the best comment we've had yet. And coming from GA, I'm not surprised at all.
Smart dude, GA is. Smart dude.
Yeah, he is. Is there an advantage to starting another policy at 25 or just stick with this one?
Where'd you see that?
You want to play with that one?
There it is. Is there an advantage to starting another policy at 25 or stick with one? Okay. The advantage is now you have two places you can go for liquidity. Okay. Remember, when we get this insurance, it is insurance. So we are bound to the rules of the insurance industry, depending on your jurisdiction. Okay. Mm-hmm. So if insurance says, hey, we approve you for whole life insurance, in our case, dividend paying whole life insurance, they're going to say, well, you're worth this much. Rather, you're insurable for this much. We're only going to do you for this much because your income is, say, $100,000 a year, and we're only going to allow you to do 25% of your total income per year. So that's $25,000. So you're limited there. But wait, if you got two of those, now you're contributing $50,000. If you're able to squeak through and get a third one, I'd probably be a little surprised with those numbers, but you could get a third one, maybe at $25,000. Yep. Maybe it's less. Okay. Or even better, let's say you yourself are capped out on how many policies you can get upon yourself. Well, maybe, John, you have a wife or kids or any other, maybe you have a business or you're a part of a business and there's key members, key crucial people that if they left or something bad happened to them, they graduated, it would be a detriment to that entity. Even a trust. Oh, we lost one of our executors or trustees or anywhere in there, right? We got to find someone. It's going to take resources. Yeah, that's a key member that can be insured. So yeah, you could totally get another one. You got if you're 25 and you got a brand new baby, that might be a good route for you to go to, because that's all base all day. Just
and there's two I'd like to add to that.
Add to them, please.
First of all, you can pay your base. Let's say you've got extra money. You could pay your base back, or you could start another policy. Let's say, well, this one was 10 grand, right? But you've got extra money and you're like, well, what am I going to do with this extra money, right? Well, you could start another policy and now you're compounding 20 grand, right? Now you're compounding 20 grand. Instead of just paying back the base on the first one's only 10 grand that you're compounding. That would be a good reason. Another good reason would be a windfall. If you had a windfall in life or a raise at work or something like that, then you would be looking for reasons to open other policies up.
Right.
That's yeah.
Now I would like to address or just stick with one. I want to address that because something just came to my mind. I personally am sticking with one right now till I not master it completely, because I will never master something that is infinite. Okay. Until I am infinite. Okay. I am only human. So infinite is relative. So I would stick with one and master. And I am internal, but this body ain't. So here I am, rocking like a hurricane. No pun intended. I would stick with one and know that one. Know it. Learn it. Be in that position to where, like it's described in the book, where you're like, I have a consistent amount of money coming in because I've made investments. I've started businesses, right? I got money coming in and I'm losing out on compounding. Now you have a problem. Now it's time to get another policy. So I would really get to know one before I jumped in another one. Just throwing that out there. Okay. Not telling you how to live your life, but know the life that you're in and the path that you're on before you start running down the road.
Exactly. Yep. Well put. Exactly.
Great question, John.
How about this one?
Hopefully you got some out of that. Simple scenario, if you had 100K from investing and you stake that 100K at 4.5 APR, you keep the asset, you use the APR to pay for your monthly bills. You could totally do that. That's sound advice. I would stick something else in the middle of that personally, but that's me. But that's the flow. That's the flow, you know.
Yeah.
Question though, is the 4.9% taxed? Also, don't know all the ins and outs of all the trusts out there in the magical world we live in, but even if that was going through the trust, are you set up properly within that trust for the trust to be able to take care of those, rather provide, or I don't know, another awesome legal word there to articulate the action of the trust, keeping the lights on, keeping the internet going, keeping the clothes on your back. You're going to need some other, yep. You're going to need some other things in there for the trust to be able to lawfully and legally do those actions. But I like the simplicity of that. Yeah, do that, but make sure your 100K is protected.
To some degree, I like this a lot. Obviously, if you're in the position, but to some degree, it's thinking of lack a lot. It's like if you're only going to make 4.9% on your 100 grand, it's like, yeah, okay, I get that. If it's your only 100 grand, then I would say, yeah, that's probably very safe and it's probably something you should do. But I personally would be one of the people that would say at least 5 or 10 grand of that you should put into something else to try and maybe outperform 4.9, because at 4.9 you're losing about 4.9 annually with inflation. So
facts.
That's not good.
Valid point. Yeah, inflation. Always the inflation.
Always. It's kicking our tails, guys. If you're not earning percent, if you're not earning 8 to 10, you're not staying with inflation. You will eventually, like, let's say you're making $4,900 on that, right? That's what you would make, right?
4,900.
Yeah.
4,900 off 100K.
Yeah.
4,900 is what you make.
Yeah. So $4,900, right?
Mm-hmm.
Maybe today you could live on that, but 2 years from now you can't. See what I'm saying?
That would take care of.
Yeah, that's
hold on. Point. Wait, that's not funny. I'm doing math in my head. Give me a minute. It's getting kind of late on the West Coast. Just kidding. That would take care of 2 of my utility bills for the year. That right. Well, no, that's live.
Currently.
Probably 1.5. Yeah, currently.
Yeah, utilities tend to go up a lot.
We need more.
In the state of California, they just passed a thing where utilities can go from 8% annually to now 18% annually and raise increase. Yep. I'm like, what? Huh. And nobody did. I don't recall voting for that. It's the craziest thing. Yeah. Anyway.
Oh, it's a business. You don't get a vote for business.
Course. Well, they're running into the same problem you and I are. And that is the value of the money has diminished to the point where it doesn't pay for or bribe the way it used to. Let's put it that way.
John's got sound advice right there. You need to invest in those utility companies.
Yeah.
John, I kind of feel like I already am every month.
Right. Yeah.
That's
Well,
funny,
put it this way, guys. I worked on my solar all day today. I put up yet another solar array because it makes sense. Where I live, it makes sense. Where Simon lives, maybe not so much, but yeah, solar doesn't work up in the Northwest
Yeah,
too well.
no. Like
It doesn't.
I'm specifically where I'm at. No, but if I went east of the mountain range, oh yeah, sure, you betcha. You know,
Yeah.
I've talked to
Or
me
the
and the wife
east side.
about it. Yeah, east side. Yeah.
Yeah.
Over there,
Mhm.
you got options, man. Lots of options.
Yeah, we do. Yeah.
Yes, we do. We do.
Where I live is, well, Money Paradise will, vouch for this. We live in one of the sunniest places in the world. Yeah. It's crazy. We don't get clouds.
Dubai?
We don't get rain. Yeah, but see, Dubai has different problems. Believe it or not, they're not one of the sunniest places in the world. Yeah. They have a lot of fog and they have a lot of other things. But
well,
we won't get into
that. Right. I was going to go off the rails there. No rails tonight.
Yeah. One thing I don't lose all your credit. Yeah.
I did another loan tonight.
Did you?
Yeah, I did. I did another loan tonight.
Nice.
So,
Attaboy.
well, I've understood. I have understood how this works in my mind. Okay, but trying to apply this into the real world has kind of been a struggle to find this opportunity of how this works. And this goes to the turning over of money, right? The $100 bill in the town, right? Okay. So what I was able to do is I have an entity that took a loan out from my bank to square up with some of its obligations. Okay. Well, that entity has now got revenue and it would like to start paying back its obligation. So I personally needed an appliance loan because we had a freezer go out last year and they're kind of getting down in price. So I said, hey, this is a good time. So on my ledger, because this is where I was getting a little lost of like, how is this going to work? And, just to keep track of where everything is. So on my ledger, I have two sides. I have the principal side, and then I have the interest, rather the amount of money that is interest side.
Okay.
Now what I'm doing in my strategy is just to keep it simple so I can master this. So anytime that I go pay back one of my loans, it goes to principal first. Okay. So in my mind, I'm like, okay, this makes sense. I'm going to pay back those loans. I'm good. My bank's good. And everything else that's outstanding is interest. So today, the entity paid back some of its principal on the loan, and that was about $234. Well, that $234 went into my banking system for 2 seconds, and then it came right back out to another loan. And so I created another loan with that same $234, and I got my freezer. And so I figured out the interest that I was going to charge myself, and I wrote down that amount on my interest side of $137.97. Now, here's the cool part that I'm like really excited about, and I know that bankers have always been excited about this. This is the cool part. I said, well, that was the same $234 used twice now, right? I've used that twice. Well, how much interest is that money earning now collectively? Well, that's $137.97 plus another $100 on top of that. So it's $237.97 off $200.34.
Gotta love that.
It's so cool. I'm so glad I was able to do that. I was able to do that full circle and see how it works.
Those of you who did not listen to that, rewind and listen to what he just said. And you can use this and you can apply this in every bill and every purchase of everything you'll do the rest of your life. What he just did. That's infinite banking. That's exactly what he did. Don't just take the word life insurance and just throw it out of your head and listen to what he just said.
It's the thing I use to collateralize.
He used money in a more efficient way than the way you're currently using your money. Period.
Right.
You're not using money as smartly as he is. You're just not. And if you disagree with that statement, then you need to rewind and listen to what he had to say. That was brilliant. Love it. Do you want to get into this Uphold thing, or what do you think?
Let's talk about that, man, because I mean, I see value. I also see some risk, but I think it's an on-ramp is an on-ramp and an off-ramp is an off-ramp. Like there's no debate with that. So share with the class what you're talking about with Uphold. And
let's just in a basic sort of simple way. If you're going to use infinite banking, you're going to have a policy. Okay, that's going to be your bank, if you will, and then you're going to borrow against it, right? So you're going to purchase something like he just described. You're going to purchase something over here. Well, in between then, you're going to want to pay because you've taken the full amount from here and put it and paid for the freezer in his case. And you're going to want to pay the freezer back, which is paying your policy back because that's where you borrowed the cash from. So your everyday job is, okay, your W-2 gives your employment gives you an extra $500 a month. Well, where are you going to put the $500 a month to slowly pay off said purchase from the life insurance policy? Because you're really not going to pay it back every week in your life insurance policy. Some you can, some you can't. Depends on the terms you set up in the beginning. Yeah. Okay. So it's called an intermediary bank. Okay. But you can call it different things. I've heard it called different things. But it's a bank in between the purchasing that you owe now because you borrowed from over here. So it's a triangle, right? You got a triangle working here. Well, this intermediary bank can now be Uphold. Uphold's going to FDIC you $350,000. Not that you would ever have $350,000 in your intermediary bank, but it is a digital company. It's a digital product that you understand. You know who they are. You've worked with them in the past. You like them. You trust them. You believe in them. Probably everybody in here has either used Uphold or knows who they are and likes them going forward. They have great success. They're also paying, I believe it's 4.8. You are now, instead of using Wells Fargo, Frado, as we like to call them, instead of Wells Fargo as your intermediary bank, you can use a digital bank that is probably less likely to fail because they don't have brick and mortar and all the other reasons that the old school archaic banking style has all these expenditures. And that's why they're giving you 0.5% on the money that you would carry in this intermediary bank. Some policies, it might only be a month that sits in there, but sometimes it could be 6 months or a year before you open up and pay back the loan in which you took to buy the freezer. So do we trust Uphold? Do we like Uphold? Are they paying enough interest? Is it worth it to us? 4.8 is better than 0.48 in the interest category.
Amen.
And who out there doesn't like traditional banks? So we all are looking for an alternative. When Simon and I, 9 months ago now, I was saying to him, I see a day when we actually use a stable coin as the intermediary bank.
Yep.
Yeah, we talked about this at length, and it is very fascinating to possibly do this with this style of being your own banker. But these guys came out and they said, look, we're going to do this. We want to be your future bank. And it's a possibility. It's an angle, and it's just thrown on the table for conversation, Simon. So did I describe that well, or what do you think?
No, that's great. No, the pass-through. I like the pass-through because we're going to need a pass-through bank account, man. We really are. Yeah, most businesses, and entrepreneurs, you have a few bank accounts. Business 101, they teach us that you have one bank account for everything to come into, and then you have 3 or 4 different bank accounts, and each one is for a specific function. One is company expenses, the other one is payroll, the other one is taxes, and the other one is profit. But you need that pass through. You need that pass through bank account. So with IBC, we have another place to do some of the functions of IBC, and that is compound. We like the compound. Now, I'm going to ask the question, well, are they going to guarantee that? Secondly, if they are a bank, like, are they a bank in the traditional sense? Are they bound to banking laws? Can a court come in there and seize my stuff and they have to bow down? All these other questions. But I do like the 4.8, 4.9. That's great. That's a secondary PDF account. Even when you might be in lieu of, hey, I want to get another policy. Where do I stick my funds? We'll stick them over here. They're compounding. Great. Taxes. It's going to happen the same thing in the PDF. If you have the trust thing going, it doesn't matter about that. You're good in the taxable event zone, but some caution, I think, is definitely there. Now, if it is a place where you can just send funds and it's a swipe, if they're going to offer a card, something in the future, I would imagine they probably are. Again, another avenue. Now, Allan, they're going for a neo.
Yes,
a neo bank, right? Okay, so now I don't know exactly what that is. Do you know what that is by chance?
Yeah, it's okay. It's they're using TradFi. Okay. In a traditional banking sense, but it's online. And they are going. That's the same thing that PayPal has. Venmo,
okay. Perfect.
Yeah.
Okay. So then we're talking probably 3 days before something clears as far as money going in, or money being sent out from one institution to the other. Like if I send money to PayPal,
I don't think it's 3 or 4 days.
If I do like a traditional ACH, it's like 3 days before I'm able to use it. It might show in my balance, but before I'm able to use it.
Maybe I don't know. I don't know.
Sure. I was. Anyways, I only bring that up because they're going to be able to do things traditionally only faster. Correct. That's kind of the preface there of their neo.
Yes.
Neo. Yeah. Okay. All right. Cool. So go ahead.
Okay. Where I see the big picture advantage to this whole thing is, in particular, okay, now Uphold is a KYC.
Right.
Which is not cool in my book. Okay. I would rather we had a Uphold that is not KYC and is basically allowing us to go peer-to-peer through them. One day that'll be there. And companies are coming that way. And it's happening. I know this sounds crazy, but a lot of people don't believe me. But that is basically where what do you call it, is headed. The one for Bitcoin that moves money. Anyway, I'm drawing a blank. That is headed to an international no KYC movement of money with an account, and you're going to earn interest on top of it. So thank you, Slave.
Lightning.
Yeah. They're able to do that because they don't live anywhere. They live in the sphere, if you will. And that's where I hope all of it goes. And I know Jack's working his tail off on that. I know actually I heard this a long time ago, and I haven't seen any evidence of it. But Mr. Jack Dorsey is working on exact same platform through a social media platform called Noster. If you guys have looked into that at all, I know it's more of a Bitcoin crowd in that sense, but Noster is talking about doing online banking through their social media. I know that X is talking about doing the same thing. The thing I love about where X and Elon is going is, I did a show about this and everybody talks about how important this is. He's talking about creating a cell phone that is $100 and it's good anywhere in the world. That's all we need for peer-to-peer. The only reason why rules and regulation is because there's FAA rules about sending messages and, oh, they want their cut and they want their percentage. But if it's from my cell phone to your cell phone and it goes through his freedom of speech connection, we win. We win.
Right.
And there's really nothing other than shooting the satellites down, not much they can do about it in the future. This is where I hope we're going. Yeah.
Just imagine you interject that blockchain thing in there. Well, once on the network, always on the network.
That's right.
As long as there's one, we continue. The circle of life prevails. Good luck with destroying all that. They're digital only. That's the Neo part. They're digital only, no physical locations. Everything is done via internet apps, dApps, etc.
Yeah.
So that's cool.
Yeah.
It'd be interesting to, because that's cashless, right? So that's cashless per se. Now I'd love to kind of dive down into the weeds of this a little bit on that topic with Uphold, right? And that is this. If we are putting real dollars into the insurance company, right, via our contracts, right, and then we send those over somehow, some way, via a loan, whatever. Again, real dollars, not rehypothecated. It's a real one-to-one with the insurance companies. I'm curious. I'd be curious to see how that works on there. And I know it's a simple transfer back and forth, but I'm going a little bit deeper here in the rehypothecation. Do they have that ability to, if I deposit, can they say, oh, now we get the rule of 10? Did they get to do that? Are they going to be able to do that? Because, they don't have any ferns, so to speak. It's fernless. So is that an angle there or not? I'm literally just spitballing, asking questions, going, I wonder how that's going to work because
that's a good question.
Because we're doing like crypto. Okay, crypto. Sorry, XRP homies. Well, no, XRP homies too. You're included in this. There is an identified finite amount, right? Could be 900 billion or it could be 21 million coins, right? Okay, so that's the real. That's all there is, right? So I'm curious on how that's going to just play out over time when we're using real dollars, real digital assets, real physical assets that we can't rehypothecate anymore. Is this a slow degradation or move to sound money where, like, if we had sound money like that and just like that, neat but not cool because of the real money, there's only this much versus real money plus rehypothecated, right? So the cash flow stops or shrinks down. It'd be like a drought, if you will. What is that? Lake Mead.
Well, what happens is everything constricts.
Yeah. I tell you what, my wallets are going to get real tight real fast.
Yeah.
Yeah.
Everybody thinks they want sound money until you actually take sound money to about step 5 or 6. And once you get to the step 5 or 6, which is getting past the fact that everybody who owns sound money wants it, once they're all rich, then what? The poor don't have any money.
Yeah.
So how does it trickle down?
Right.
And it's the biggest dilemma is credit. How do we supply liquidity to the market? I know XRP. We got that.
Right.
But there's only,
still,
100 billion coins. This is an issue.
Yeah.
Right. Yeah.
Yeah, it is.
It's a big issue.
It is. And I find it fascinating just to see how
it is. And this is why I know that there will never be sound money. Never.
Spoiler alert.
Yeah. There's never been sound money. And everyone goes, oh, no. There used to be sound money and we were backed by gold. Please, man. What? You mean governments didn't print more than what they had in gold? Of course they did. What did Caesar do? He put more damn copper in it till everyone went, well, that's a copper coin. My point is there's always going to be from the top deception in any way they can. Mm-hmm. And it's not because of necessarily to make themselves wealthy. Sometimes it's just to put some more money out there so it moves around and sloshes around. Yeah. Mm-hmm. I know it's not a popular thing to say on a lot of these channels to say that there will never be sound money. But again, one more point. The reason why I know there's never been sound money is because there's always been a black market. And there always will be a black market. There's your proof that there's never been sound money. Yeah. Yeah.
Yes, sir.
Yeah. So this is somewhat accurate. I would agree. Yeah.
Yep.
Yeah, that's correct.
Yep.
There's a big issue though, because we will never go back to precious metals. That ain't gonna happen.
Is that because we're sissies and we don't want to carry a big purse?
No, it's because you can never trust who counted it last and where it's stored at. Yeah, that's always been the problem. Always. That's the biggest problem. I'm gonna say something that's probably not going to be real popular with a lot of gold people. I own gold and I own silver and always have, and for a very long time.
So you can speak on it then, my friend. Speak on it.
Yeah. I want to say something that nobody tells you in the precious metals world. I've never met a human being, no one. I work with billionaires who have millionaire friends. I've met thousands of these people through parties and time, and I've never met a person who said, I got wealthy from gold. I got wealthy from silver. Never. You will never meet millionaires who said, the reason why I'm a millionaire is because of gold. The only people who are millionaires because of gold are the people that sell gold. I'm just putting that out there. Because, they make a commission off selling something. Therefore, if they sell enough gold, they become millionaires. But nobody ever bought gold. And 20 years later, I became a millionaire because I bought the gold. I'm just saying. And I know this decade going out in front of us is different. And I know you're going to listen to all the gold bugs tell you that this time it's going to go to $1 million and everybody who owns an ounce of it's going to be really wealthy. I've been buying silver since 1980. This is not my first go round here, kids.
Wow. You mean back when Knight Rider first came out? That's amazing.
When Knight Rider first came out. And I bought it early in life and bought the story. And trust me, I would not sleep well if I didn't own some gold and silver. I think a little portion of it is probably a good idea in case we were to ever go Mad Max. I don't want to live Mad Max.
No, thank you.
Yeah.
No, thank you.
Yeah.
If gold went to $1 million, you wouldn't want to live in that world. You
No,
really
and
wouldn't.
the other problem is you couldn't spend gold. And people
No.
say, well, what do you mean? Yeah, I could. I just could run down to the store with it. So you're the guy in the car who goes to the store, headed to the front door of the store so they know you own what?
Gold.
Gold. And
By
they
the
gotta
way,
go.
don't they have to do some paperwork there when you're sitting on a huge amount or lots of dollars across the table to you and you have a tiny little nugget of some
Yeah.
precious metals? I'm pretty sure there's some paperwork that happens there, and there you are on camera. They got all the 360 view.
Yeah.
Trust me, they'll find
Yeah.
you.
Yeah.
You know.
Yeah. I mean, that's, it's good to have. I think everybody should have a little bit of it laying around. But if you think it's
Yeah.
going to make you wealthy, that's never happened. Name me somebody. I mean, it's crazy. But anyway, everybody tells you, oh, this time's different. It's going to go way up. Okay. I mean, and it might. I hope it does to some degree. I'd like to see crypto and silver or crypto and precious metals go up. I'd love that. That'd make me very happy. Because precious metal people have been waiting an awful long time. Let's remember, guys, I bought silver for $50 in 1980. 1980, kids. It's $30 right now.
32.
Hello?
It's 32.
$32. And I bought it for $50 in 1980.
Mm-hmm.
Oh, yeah, you're going to make money on that. Yeah.
Mm-hmm, mm-hmm.
I'm just saying, that's math, and had anyway, I don't want to bag on anybody, but I went to her convention and in 2014.
Oh, yeah. Okay. Yeah.
Yeah. LZ are her initials. And I went to her little convention in 2014. Right. And had I spent that massive amount of money back then on any one of the cryptos, I'd be a multi-millionaire today. And by the way, I think silver might have almost doubled since then. I think it was like $17 back then. So there you go. It's almost double.
Yeah. Yeah.
Yeah. I'm just saying. And in 2014, Bitcoin was $1. It's gone up 65,000 times.
I think you're in the $30 range, actually. But I mean, I'm not trying to be.
All right. I don't
know. We'll just look.
Simon, what is the answer to this question?
How much time do we got? Okay, cool. I can answer it. Allan / Simon, do you both hold Iraqi dinars? What are your opinions on this as an investment? Okay, I'm going to work backwards. First off, what are your opinions on this as an investment? It's a lottery ticket. I'm treating it as a lottery ticket. However, as of late, when I say late, I mean literally the past 2 years, there has been an undeniable amount of mainstream news that shows that Iraq, the country, is coming out swinging back on the world stage. They are actually hosting the UN, United Nations, in January. They're hosting them. That's a big thing. They are going through and have achieved, I think, almost everything to become another, renew their membership to the World Trade Organization. They already are members of some other world organizations. The IMF, the BIZ are 100% supporting the Central Bank of Iraq and their monetary reforms. The United States Treasury has taken allegedly the seventh floor, a floor of the central bank in Iraq to help them through they're switching out their currency, and there's a little different things that are going on there, because one, inside Iraq, they are getting rid of the huge notes, and they're going lower denominations. So a $20,000 bill would be a $20,000 bill. Okay. They're also working on, outside of Iraq at the world stage, is the nominal exchange rate. Nominal meaning they're also going to be deleting the zeros on the exchange rate. They're also deleting the zeros on the currency inside Iraq. What does that mean for all of us on the outside of Iraq that has those big bills? Well, we have what appears to be a window, still waiting for that to happen, a window of opportunity to where we can take our dinars and be able to exchange them in at the new exchange rate. So in a very hypothetical situation, again, kids, I'm talking lottery ticket here. Okay. Scratch ticket.
Yes.
Okay.
Yeah.
Okay. It really is like, and I'll get to answer the first part of your question here in just a moment. When they say they're going to change the nominal exchange rate, right now the exchange rate, one Iraqi dinar equals 0.00076 cents. Okay, again, that's 0.00076 cents. If they delete 3 zeros, it would be 0.76 cents. So 76 cents to one Iraqi dinar.
Correct.
So if you happen to hold, and everything holds true in this whole craziness thing that's going on, if you had like $100,000 worth of Iraqi dinar and you exchanged them in, and the exchange rate was 0.76 cents, so 76 cents, you would have 76,000 US dollars.
Yeah.
So
for the price
that,
of $100.
I'm willing for the price of $100. So to answer your question, Atlantic, yes, I am holding some dinars, a couple scratch tickets worth, because why not? For me, it's why not.
And I will answer that as affirmative as well. Yeah.
So here's something that kind of when I got the dinars. First off, I heard about this a very long time ago.
Long time ago.
And long time ago, right?
Like 14 or 15, it was big.
That's when that's about when that's about when I really first heard about it, saw some stuff online. I looked into it, like where to get them, but I'm like, dude, I don't know if this is real money. Like, people print money all day. Like, how do I know I'm buying the real stuff? Right. So I didn't do it then. Right. But, years later, here I am. Things have changed. And by the way, a side note, Iraq's going all digital, all blockchain. And
I was gonna bring that up, but because you missed that earlier.
Yeah. No, they're going all blockchain, baby.
Completely.
They have been in the gutter for 20 plus years. Beyond that, okay, but arguably for sure for 20 plus years. Okay, so here it is. They're finally rebuilt. They're coming back on the world stage, and now they're going to get all the latest and greatest inventions and technology has to offer for their whole financial commerce system. Back to the scratch ticket real quick. Back to the scratch ticket. So one day I was like, you know what? I think I'm going to get some. And here's the beautiful part, right? I've bought Shiba Inu before. Okay. If you've even bought Shiba Inu, okay, you know what I'm talking about here. So with the Iraqi dinars, worst case scenario, I get my money back.
That's it.
Worst case scenario, right? The exchange rate doesn't happen. Oh, they're not worth this anymore. Hey, we're only going to give you this exchange rate. That's what you get, blah, blah, blah. It's like, okay, well, I probably won't take the first no for an answer. I'll probably go around and find the answer I want. But if it ends up being that is it, then I guess I get my $100 back. I couldn't do that in Shiba.
That's right. Yeah. So,
You know?
would I buy it as an investment today? Probably, but it wouldn't
Yeah.
be. I wouldn't call it an investment. I'd call it, like Simon said, it's a
A
lottery
lottery
ticket.
ticket. It's a lottery ticket,
Oak,
man. This
Oak, I'd like to disagree with this statement right here. Okay. Here's the reason why I disagree with this, and there's numerous reasons. Okay, you guys didn't know we knew so much about the Iraqi dinar. I know a lot about forex currencies. I've forgotten a lot, but one of the things I know that when you switch over, if you don't have any national debt, which they don't, if you don't have an income, which they do, then those two things are going to destroy your currency over time. In particular, very quickly, because everyone's going to, like you say, cash out, make a bunch of money. I made 76,000 on $100. Wow, I'm rich. Okay, but what does that do to their economy? All of a sudden, they've all the people of their country have a lot of scratch, because all those people got bills laying around. You know they do. They're not stupid, right? I mean, just because the U.S. went in there and blew up one of the most beautiful cities in the world, Baghdad, in the world, okay, and we made rubble out of it. Those people haven't forgotten, and they have their cash, and they got it under their mattress, and they know that one day it's going to be worth something, because everything that Simon just said. They got a lot of oil. They don't have any bills. They have already been recognized, like Simon said, by the IBS and the International Monetary Fund, and everybody else is like recognizing these people as a one-day sovereign nation who can support themselves financially. Well, what does that tell you that the IBS likes? They like countries that have assets that they want. So they're going to do what? Promote them, use central banking.
Come on in,
come on in, because you got a commodity that we all need. Now, if oil were to disappear tomorrow, I would say you're correct.
They got it. They got it. Oh, dude, they have minerals. They got a ton of oil. They got a ton of gold. They have a ton of natural minerals that we now use.
Yeah, I mean,
20 years ago, that wasn't a thing. That wasn't a thing 20 years ago, but now, game changer.
Look at the army and the military and all the weapons and everything that Saddam Hussein amassed, and what he did for his country in a short period of time. That's how much profit of oil they had for all that time.
That's just oil.
Because of oil. If oil goes away, I'd say, Brandon would be right. But I don't think Brandon's correct in this sense. In fact, Simon and I, well, more Simon than me, we have talked about the fact that we think it's going to spike. I think it'll settle down a bit, and then it'll slowly climb up. That's what I think is going to happen to that currency.
Now we're just talking price action right now, right? Let's interject the time of exchange, right? The take those gains quick if you can. I'm kind of the mindset that there will be a window of opportunity, meaning Iraq could say, hey, look, we're doing this. We need to get all these other bills out of the world. Y'all got 90 days or 60 days or probably 6 months. Okay, I'm just throwing out time frames here. I don't know any of that, but I could see that. I could see that, right? Like that's valid, right? So I mean, for me personally, I'm going to go on and take the money and run. Hey, what I get is probably the biggest and best trade, if you will, that I've ever done in my entire life. It will be it, because if 50% of what I just really said comes to fruition, and we have the opportunity to go to an exchange near you to do that deal, I'm telling you, if for $76,000, run that through the policy right quick, and then on the crypto line. And honestly, I might not even be able to run it through the policy real quick. I might do a few different things. One, I'd be in trust land real quick. I might run that money through my policy first and then go do the trust thing, right? And now I'm sharing some of my just my schools of thoughts and strategies here. But I might go right into crypto, depending on the time frame, right? If crypto peaks well, then I'm running that through my policy, and I'm going to work on my patience.
I mean,
you know,
if you get 76 cents, what is that? 155,000 XRP.
What's up? Yeah.
If it
was still at today's prices, yeah.
Hello.
I don't think I'd go on. I wouldn't do all in an XRP personally. I'd go for some.
John, basically, we got what, like 100,000 for $100, something like that.
Yeah. In reality, we should have got 130. But that was that's what happens when you use an exchange. Now, I did not buy online. I found an exchange, and you all can find them relatively local to you. All you have to do is go to your international airport and find out where the currency exchange place is in your international airport, and you're good. If you don't have one, then do it. And yes, I did physical cash, not online. No online. Physical cash. I got receipts. I'm good. So
yeah,
proof of
you just answered this.
Yeah, I did.
Well, there's a couple other things you could do too. I mean, you could get on a plane and fly to Iraq.
Okay. Okay. So let's talk about that part. If you did that,
because
they want your passport and go through all your information to say you are who you say you are and how much you're doing. And I wouldn't exchange in Iraq, by the way, because you're going to get their single notes.
True, but but what I'm saying is it's essentially free $75,000. So even if you flew first class, you're probably doing pretty good. That's all I'm saying.
I'd go to for sure. Now, one of through my own research on a place to exchange it at, you would more than likely need to go to a bank that deals in world currencies. And I know of two. One is JP Morgan. Not, JP Morgan Chase is something, but it's JP Morgan. That's the international footprint. And then Citibank is another. Those are the only two that I'm aware of that we have access to here in the U.S. No other banks could play ball too, right? But those are the current ones that are on the international level. They deal with currency. You could walk into a Chase bank, and they say that they will be able to exchange it right then and there. Where you go into other banks, they'll say we have to order it. Well, guess where they're going?
That's right. Yeah.
Or you can go to.
By the way,
exchange place.
This number is on the board as well. 338 is a possibility as well.
Now let's talk about Kuwait, because Kuwait's already done this.
Yep. And so did many years ago. What else did it too?
Don't know.
Wasn't Yemen.
I only know.
Was it Jordan?
Oh, yes.
I can't remember.
Yes, Jordan. I think Jordan did. Yes.
I think Jordan did it too.
Yep.
Also, yeah.
Yeah, I think you might be right on that. But Kuwait did it, and they came out at 325 or something like that when they first came out. They said, they did all the hype of, oh, we're not going to do this, oh, we can't, blah blah blah. Oh, guess what? Lights are on. Boop.
Yep.
And boom, they had to do it. Now, whoever was smart and was in the right position.
And you forgot one other thing too. Their president, prime minister, whatever he is, came out and said he was going to do it.
Yeah.
So unless he was a swing from the tree.
Yeah.
He's gonna,
Yep. You got you got the current president, and you have the current what do they call it at the central bank? They call it is it the general? No. God dang it. Anyways, the head of the Central Bank of Iraq, they both talked about openly have said that the dinar will be stronger than the dollar. The IMF has on their website, so you can find articles, IMF and the biz. You can find articles that are talking about Iraq and Iraq revaluing its currency.
Yeah.
It'll be a whole bunch of boring crap, and you'll get this little gem. And they literally talk about say revaluation.
And it makes a lot more sense for them to go above the dollar. It just makes a lot of sense.
Well,
Like,
yeah,
why
let's
would you
talk
go-
about that. Economic. Well, yeah, okay. So they got this major, huge project going on. It's freaking huge. It's called the Development Road Project. It's basically a huge road that goes from the Port of Fa all the way up through the northwest of their country, and all along will be like all these what do they call them? Economy cities, to where there's lots of production, warehousing, etc. Just along that whole road. It's crazy what they're calling for.
They also settled the big dispute between the Shiites and the whoever else.
They're starting to
calm that whole thing down and say, "Whoa, you guys are where the oil is, man. We got to take care of this. We need to fix this situation over here." They're really becoming a global country. I like every time I read anything about Iraq, I really like what they're doing over there. There's a guy, I don't know if you guys have ever seen his channel. He just goes around and eats food in Iraq, and he's an ex-soldier, and he used to live there when he was in military. And he was like, "Man, I love it here, man. I'm staying here." And it's, life's cheap. I can live for free, and the food is amazing. So, and they make it right in front of you, right there are street vendors. And yeah, it's a really cool show. I can't remember the name of it, but I haven't seen it in a long time. But yeah.
That's good. Money Paradise, thank you. Yes, governor. I don't know why I brain farted on that. Governor.
Yeah.
Of the central bank. Governor of central bank.
Finance minister, all of them they're all in on it.
John wants a new episode on the dinar. Oh my gosh, man. There's so many dinar gurus out there, like, man. Yeah. We've heard it all, seen it all. Militia Man's good if you want to get some good, solid, level-headed information, articles, and perspective. Militia Man. I like Militia Man personally.
We just did 10 minutes on it, guys. I don't know what you want.
Yeah, there you go. Top it up. Yeah. Send it. That can get you through the end of the year.
Hey, would you like to talk about Venezuelan oil futures? Because I kind of know a lot about what's happening down there on that now, too.
Let's talk about that.
I want to bore everybody.
Can we put it in the trust? Can we put it in the trust?
Oh, yeah. Well, here's the thing.
Let's talk about it.
No, I won't get too deep in it, but I will tell you guys right now, they have a completely different oil than we do, and that Russia has, and that everybody else has. They have a thicker, like it's more dense oil. So there's so many more things you can make out of it that we can't make with light sweet crude. And the whole world needs it, and they're giving it away for free. It's so cheap right now. And anyway, there's all kinds of, how do I put this? Competition, and everybody's competing for the excess of Venezuelan oil. And it's really big, and that futures market it's a big play. But it's a trade that I don't trade anymore, so we won't get into that. So we got to get rolling, dude. It's been 2 hours, man. We have to bounce out of here.
I thought we were going 3 tonight. Weren't we going 3?
You and I, dude, we could talk Iraqi dinar for another hour.
No I know. Great question. Thanks for bringing that up, Atlantic Living, because that's just one more thing that I know some of us are exposed to. But scratch ticket, my friend, scratch ticket. I'm into crypto for sure. I'm definitely into the IBC, of course. Navigating my way to the trust as well. These are things where I'm really giving my attention, So if a windfall comes from the Iraqi dinar, I'm set up, ready to go for that type of windfall, my friend. Good stuff.
I don't give stock tips, but I really think that one of the most undervalued companies in the world today is Tesla.
There you go. You heard it. You heard it here again.
Tesla is very undervalued. I know it's expensive right now, but it's gone way down, and it's worth 5 times that. Just look at what he's going to do with the phones. Hello. just think about this real quick, guys. He's going to put phones in everybody's hands in the world. $100 for a cell phone. That's global, good anywhere. Dude, you don't think that's going to sell? I mean, if you don't own Tesla stock, I don't know. I don't know whose side you're on. I'm not a big
Maybe that's the
fan
problem.
of
Maybe
stocks.
that's the problem. Maybe that's the problem. Maybe.
Yeah. And look what he's done with Twitter. I mean, he got rid of half the employees and it works better. I don't know. He's good at business. Let's put it that way.
Yeah. Cool.
Simon, man, I really appreciate your time. And it's
always a pleasure.
We had a
to come
great
on, Allan.
one.
Always.
That was a good show, dude. Really good
Yes,
show.
sir. Always a pleasure.
I really appreciate your time and what you do. I had 2 questions on here we never even got to, so that tells me we had a good time. Yeah. But we will be back next Tuesday night for an IBC and more of your Dinar questions and futures and Tesla advice. I don't know. It's not financial advice, entertainment only. So
that's right.
And yes, dip a toe tomorrow night.
Dip a toe. Yeah, that's right. Thank you, Life with Glee. Yes, dip a toe tomorrow night. We have someone coming on that's going to be talking about the new way we might be managing our passwords. For Your Eyes Only is the company. Actually, it's FYO. Wait, For Your Eye. FYEO is the name of the company. Really going to be an interesting topic, guys. I actually really swing through for that. If not, watch it on the replay. That actually is going to be really fire. It's related to crypto, but it's also related to tech. And Melissa and I are really trying to not get out of the crypto, but like we've talked about all the coins we can. It's time to talk about the tech, the technology, the things that are coming down the pike. So good things are coming.
Which is kind of what we do here on Tuesday nights, and what we're going to also do on Thursday nights is talk about what are you going to do with yourself? What's going on? Yes, we are going to have a show. Brent and I are going to have Sundays. Again, StreamYard sort of dropped the ball on us last week. So, sorry guys, but we are not dropping that show. And Thursday night show is going to be a lot of fun because I have some really exciting news and how it applies to your life and how you're going to work out with your exit strategies going forward. So with that, I am going to try and get out of here when I can still spend some time with my loved ones tonight. Simon, thanks again, brother. And we will see you all next Tuesday night for another episode of IBC. Love you guys.
Take care, everybody.